Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, February 26, 2025. Hope you're having a fantastical day out there in the interwebs. It's, well, it was sunny earlier. It's kind of getting gloomy and getting a little overcast here in Colorado, but still a nice day, and it's not freezing outside, which is nice. So we've been enjoying the nice, warmer, I'm putting that in quotes, weather this week. It's going to get cold again next week, and we got, a few more snowstorms before the end of our winter, which sometimes lasts until May around here. So it's just the end of February right now. So we got March. Definitely snows in March. We're going to get probably a little snow in April, and then May. We've had most years we've had at least one snowstorm in the first week or so of May. So anyways, all right. Well, markets are ticking higher ahead of NVIDIA's much anticipated earnings report, which could set the tone for AI and the tech sectors. The Dow, S&P, and NASDAQ were, two of the three are in the green. And App Loving is tumbling 14% after an ad fraud short report, while Supermicro and Axon are soaring over 19%. NRG Energy is up 10.5% after jumping into the AI data space. Meanwhile, European stocks are hitting record highs on a U.S.-Ukraine minerals deal, and the dollar is strengthening as House Republicans push Trump's tax cut plans. So before we break all the news down, need some help from you. If you could give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All righty. Well, let's get into today's markets. Dow Jones was down 0.43% today, 186 points. Closed at 43,434. S&P 500 made it back into the green, up 0.18%, 10 points, closed at 59.65. The NASDAQ up 0.26%, 48 points, closed at 19,075. The VIX was down 1.49% today. It's at 1914. Canada up 0.49, Brazil down 0.95, and Mexico up 0.38. In Europe, Germany was up 1.73%, the UK up 0.72%, France up 1.15%, the Netherlands up 0.25%, Spain up 1.64%, Italy up 1.32%, Switzerland up 0.11%, and Portugal up 1% flat. Russian exchanges red today, MOEX down 1.74%, RTSI down 0.93%. And the overnight markets, the Nikkei in Japan was down 0.2%, Australia down 0.14%, New Zealand up 0.19%. In China, the Shanghai was up 1.02%, Shenzhen Component up 0.93%, China A50 up 0.61%, DJ Shanghai up 1.14%, the Hang Seng up 3.27%, and the Taiwan weighted was closed. All right, so those are our markets. Feel better, folks? I know I do. Let's get into our market recap. S&P 500 gives up its gains on fresh tariff jitters. So, markets were back and forth all day, green to red, red to green. All right, the S&P 500 erased gains Wednesday as investors' sentiment soured following President Trump's announcement of new tariffs on Mexico, Canada, and the European Union. The tariffs set to take effect on April 2nd reignited trade war fears, with Wall Street previously hoping for a resolution. Trump also declared plans to impose a 25% tariff on European Union goods and announced the termination of all of a deal with Venezuela due to its refusal to take back illegal immigrants. Despite broader market volatility, tech stocks rebounded from a weak start to the week, led by NVIDIA, which rose 2% ahead of its highly anticipated earnings release after the market closes today. The AI chip giant is projected to post Q4 revenue of about $38.25 billion, or $38.25 billion, including $34.06 billion from its data center businesses, according to Bloomberg consensus estimates. First quarter guidance is expected to reach $42.26 billion. Supermicro also surged 13% after filing its delayed financial reports, ensuring compliance with NASDAQ requirements. In earnings news, Lowe's gained over 2% after surpassing Q4 earnings expectations, benefiting from its strategy to expand sales to retail and professional customers. I do my part. I shop at Lowe's quite often. So, Workday jumped more than 5% after reporting strong earnings and issuing upbeat guidance for the fiscal year. On the downside, AppLovin plunged 17% after Culper Research revealed a short position in the stock. Global payments from Flyware tanked 39% following disappointing quarterly revenue. Instacart fell over 11% after its revenue and EBITDA guidance missed expectations. General Motors bucked the trend, climbing 3% after announcing a $6 billion share buyback and a dividend increase of 3 cents per share. All right. So that's the market news for today. Good stuff. All right. Let's hop into some data. The January new home sales report from First Trust. Mr. Bryce Gill put this report together. So let's dive into this. New home sales weakened in January following 2 months of strong gains, partly due to severe winter weather in the South, the largest housing region. Sales reached an annualized rate of 657,000 homes, falling below pandemic highs and largely unchanged from 2019 levels. While a modest upward trend in sales is expected in 2025, the housing market still faces challenges, particularly from rising mortgage rates, which have climbed back above 7% after briefly declining ahead of the Fed's rate cut announcements in September of last year. One positive for buyers is that the median sales price of homes has fallen nearly 3% from its peak in October of 22. However, this decline is mainly due to a shift in the mix of available homes, with more smaller properties entering the market rather than a true drop in price per square foot. Supply conditions also differ significantly between new and existing homes. The supply of completed new single-family homes has surged over 270% since 2022, whereas the existing home market remains constrained due to homeowners holding on to low fixed-rate mortgages from the pandemic era. Meanwhile, national home prices continued to rise. The Case-Shiller Index climbed 0.5% in December, up 3.9% year over year, while the FHFA Index increased 0.4%, up 4.7% annually. In other economic news, M2 money supply grew by 0.1% in January, keeping inflation concerns in check. With inflation at 3%, the Fed is unlikely to cut rates unless the economy weakens. The Richmond Fed Manufacturing Index rebounded to a +6 in February from a -4 in January, signaling improved mid-Atlantic factory activity. All right, so kind of mixed, So, I mean, granted, I don't think interest rates are going to go way back down. So, people either need to lower their expectations of a home they can afford, or they need to save up a bigger down payment so that their, mortgage fits within their financial constraints. All right. Next up, got an article from Zero Hedge, Behavioral Economics, Managing Your Inner Voice. This was written by Michael Leibowitz of realinvestmentadvice.com. So get into this article. With high equity valuations, rising interest rates, and bold political moves, market volatility is likely to remain elevated. After 2 consecutive years of 20-plus gains in the S&P 500, a period of average or below average returns should not be surprising. This environment can trigger irrational investor behavior, making behavioral economics an important topic to consider. And also something to consider is that all the inflation, it's not really that these assets have really grown in value. It's just that the inflation we've experienced and the amount of dollars in the system has really pushed up the prices of these assets. So how much they've actually appreciated during that time, that's hard to say. I mean, you'd have to compare it to something more stable, such as gold or silver, to really see, has it, in relation to something else as opposed to the dollar, if it's really going in a positive direction. All right. So what is behavioral economics? Behavioral economics examines how cognitive biases and emotional influence financial decision-making. Unlike traditional economic theories that assume rational investors, behavioral economics acknowledges that people frequently act irrationally. I assume most of the time. Key behavioral biases affecting investors. There's bounded rationality. Limited cognitive capacity forces investors to make decisions using shortcuts, often leading to suboptimal choices. There's the prospect theory. Investors are more sensitive to losses than gains, causing risk-averse behavior when winning, but risk-seeking behavior when losing. Anchoring. Investors fixate on irrelevant reference points, like the price they originally paid for a stock, influencing decisions irrationally. Overconfidence. Investors overestimate their knowledge, leading to excessive trading and risk-taking. Herd behavior. Investors follow the crowd, contributing to bubbles and crashes. How behavioral biases impact markets. These biases drive market anomalies such as bubbles and crashes. Investors overpay in markets due to herd behavior and overconfidence, but panic sell at bottoms due to loss aversion. Over and under reactions to the news. Investors may overreact to short-term headlines or underappreciate important information, distorting stock prices. Investment strategies to mitigate behavioral biases, avoid overtrading to prevent emotional decision making, diversify beyond familiar stocks to reduce home biases, implement a disciplined approach to portfolio management, and consider professional financial advisors to counteract personal biases. Hey, that's where I can help. By understanding behavioral economics, investors can make more rational decisions and navigate volatile markets more effectively. And unfortunately, right now, people are so left or right. They're very much on my team, your team. My team good, your team bad. I think that's where I have a interesting view because I'm libertarian. I don't really like either side. I don't like how they do, especially from a politics perspective. The people are fine, but the people in Washington are terrible. So, anyways, all right. Last up, got a opinion article here. Commentary: Trump voters feel the economic blow of his policies. So, I've been seeing a lot of these articles. I don't hear a lot of it from actual people. All right. As the Trump administration rolls out significant policy shifts, many of President's own supporters are feeling the impact, from federal job cuts affecting veterans to funding freezes for farmers and potential Medicaid cuts in red states. Broad policy changes are sparing no one, including core Trump voters. So who are not Trump's core voters? People on welfare? With the Department of Government Efficiency pushing to shrink the federal workforce by 10%, veterans are at risk of layoffs. Veterans comprise 30% of the federal civilian employees, with many working in defense, transportation, and homeland security. Regions like Colorado Springs, where military installations fuel local economies, could see significant economic consequences. Farmers in states like Iowa, Wisconsin, and Pennsylvania, who overwhelmingly back Trump, are now dealing with the abrupt halt in federal funding from the USDA. The shutdown of USAID further removes billions in U.S. crop purchases, adding financial strain to agriculture-heavy regions. The House GOP's budget resolution includes $880 billion in spending cuts, with Medicaid as a likely target. In states where Medicaid covers 20% of residents, like Kentucky, West Virginia, and Arkansas, concerns over healthcare access are mounting. Even 71% of Trump voters oppose Medicare reductions, per KFF focus groups. Trump's new tariffs, particularly those on aluminum from Mexico and Canada, threaten job losses in key states like Kentucky, Tennessee, and Michigan. Alcoa warns that levies could cost 100,000 jobs, disproportionately impacting Midwest and Southern workers. As economic uncertainty grows, Trump's policies are testing the loyalty of his voter base. Yeah, again, I see a lot of this in the media and on social media, but I don't really see a lot of this from real people people I talk to, and the people that are screaming to have the government just slash and burn everything. So anyways. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone next time. Adios.